Realtors, if you ever lost an offer you thought you had locked in, this episode's for you. Today, I'm pulling back the curtain on how the right lender partnership can be the difference between your buyer moving into a home or moving on to another realtor. I know it's tough to hear this, but you're going to want to stick with this till the end because I'm going to give you 3 quick nuggets you can start implementing and using this week that will help you stop leaving money on the table. By the way, this is Real Talk with Matt, and I bring you real-world strategies every week to grow your business. If you haven't already, hit that subscribe button below so you don't miss the next one. So segment 1, we're going to talk about the hidden advantage realtors overlook. So let's start with the hidden advantages most realtors don't even realize they have with their lender. First, pre-underwriting versus a pre-approval. 2 big different things. Most agents think a pre-approval letter is enough, but in today's market, sellers are skeptical. House has been on the market for a lot longer than usual. They want to make sure that the deal that they're going to accept is one that's going to get to the finish line. They've seen deals fall apart before. Pre-underwriting changes everything. It means your buyer's basically credit approved before the offer goes in. It is the closest thing you can get to a cash offer without cash. I use this all the time. I had a deal recently where the listing agent told me straight up, we picked your buyer because they were already underwritten, and that's the kind of edge that gets your offer accepted. That's a big deal. So with some of my lenders, we actually do a full underwrite. What that means is we submit the credit, the income, assets, all the things, and it's actually underwritten like we have actual contract. The good news is it's bulletproof. So after we get a contract, all we do is put it in the TRID to get the initial loan estimate out and the initial lender disclosures. And then we're done. We're pretty much done. We're waiting on title, insurance, and appraisal. It's that easy. And these are ways that you can win deals and win them faster. Second, fast, clear to close timelines. How many times have you lost a deal because the seller chose an offer that would close faster? You've probably seen it before. I've seen it before with 60, 90-day closes, and I'm like, man, if I was selling this house, there's no way I would take that. Speed is of the essence. It's not always the only factor, but it's important to make sure you have speed with these things because people want to get out of their house. They're selling their house for a reason. With Anchor Home Loans, we average under 14 days on so many files. And that's just not speed for speed's sake. It's leverage. Sellers will sometimes accept less money just to close quickly. I know if I was selling my house and we could close quick, that's what I would do. It's a negotiation tool you should be bringing to the table. The third thing is proactive communication. Too many lenders disappear once a pre-approval letter is sent. I could tell you stories for days on this. That leaves you chasing updates and explaining delays to your client. At Anchor, we do the opposite. We're updating you, your client, and even the listing agent every step of the way, all the way down to the title company. Problems get solved before they blow up, and that makes you look like a hero. I can't tell you how many times I've seen deals literally just explode, honestly. And it's because nobody's communicating, the realtor's not communicating, the title company's not communicating. All those things go into factor with that, and it's a big deal because communication, I will tell you right now, and if you took a poll of 100 realtors, I would say probably 95 or more of them would agree with that in that situation. Actually, I have a client closing next week, and they start off, I'll say it, Lake Michigan Credit Union. The loan officer went on vacation during the pre-approval process. It left a month on the table with no answers because nobody picked it up. And on top of that, they worked their set hours, 9 to 5, no weekends. Once they got a contract, they came back and said it's going to take about 45 days for us to get us to clear to close. And I'm like, so not only were the rates higher, but the time was extended. And most banks, unfortunately, are like that. So I was able to actually help them get a 0.5 point lower rate on an FHA loan. And it's been 8 days in underwriting, and all we're waiting is for one thing from title, and we're done. So it's a big thing there. So there's a lot of factors that go into this, and I understand there's been a lot of people, or there are a lot of people in this market that are realtors that are working with mortgage people they worked with forever. But I'll tell you what, if you're seeing a downward trend on communication, leverage, and being able to get to the finish line, it's time that you should probably give me a call. I'm just going to be honest with you, because my team, between the operations and myself and talking to clients, is we make it a huge experience. Clients love it. They go tell their friends and family, and I get referrals back to you because I would never, ever, ever do anything different. And that's how we grow our business together. For segment 2, I want to talk about why realtors leave money on the table. And it's a couple things I think that are pretty important, which is the flip side. So why so many realtors leave money on the table? Number one, not leveraging co-branding tools. So every open house, every yard sign, every Facebook post is a chance to capture leads. I will tell you that. My following's not huge, but I got 7,000 people. When I post stuff, reshare stuff, it gets seen. On average, I have probably about 150,000 to 300,000 insights just from Facebook alone of people looking, liking, sharing, commenting, arguing, whatever it may be. Okay. Just one person. So if you share something, I share something, now we just reach double. But if you don't have a QR coded pre-approval link, or like I give all my realtor partners your own pre-approval link, these are all things that go right back to Google and searches and SEOs and all this stuff. But these are all things that are important. It ties it together. I even have a credit app that I could create for realtors to share with their clients so they could go on the credit journey and understand what the credit is. It's all geared towards home buying. It's free because I pay for 1,000 seats monthly for that service. And it's a service I offer to my clients and I can offer to my realtor partners. But I think having co-branding creates a little niche and circle of togetherness, because the first thing that's going to happen is, as a client, is if they're not getting the responses, communication, everything else, they're going to go right to Google, and then they're gone because somebody else is going to do it. So I Anchor, my company, we give our realtor partners free custom pre-approval links and tools that you can lock in buyers on the spot. You can literally be showing a client a house, be at an open house, be like, hey, look at this link. It'll probably take you 5 minutes to fill out. You give me a heads up. All I need is some income docs, and we can do pre-approvals pretty quickly. Number 2, missing lead capture opportunities. Realtors spend thousands of dollars on Zillow and Realtor.com leads, but ignore the warm buyers walking into their open houses, or the people right in front of you on Facebook, Twitter, X, whatever you want to call it. There's people out there that you're talking to consistently that are looking to possibly buy a house. If you're not self-promoting your business, talking about the business, talking about the market, giving people tips, tricks, whatever to be successful in buying a house or selling their house, those are things that you're missing on opportunities. You don't have to spend money. I spend very little money on marketing. And if I do, it's typically my realtor partners to help them out. But that's it. Like, the people are in front of you. Most of my business is self-generated. And it's because I try to provide value. I try to provide information, and I like to communicate with people. And that's how we make it happen. I have people that see posts from 3 years ago or videos I made 3 years ago, and they're like, hey, I saw your video on non-QM loans. We might be a good fit for that. And I say this a lot. Consistency is always going to be your key. Okay. Consistency is always going to be your key. If you're on a bad day, it's fine. Yesterday I had a really bad day. I was really upset with what happened with Charlie Kirk, but I plowed through it, and you just got to keep plowing through it, and things are going to happen. Things are going to set you back. Things are going to push you forward. You're going to have your good days and bad days, but you got to be working with the right people, because when you work with the right people, your business is going to grow. Number 3, weak lender follow through. So here's the truth. When a lender ghosts your client, it reflects back on you. Think about that. Truth. When a lender ghosts your client, it reflects back on you. Okay. Buyers think, if my lender isn't responsive, maybe my agent isn't either. But when a lender over delivers, that client remembers that experience for years. Okay. I've had buyers call me 6 months after closing just to say thank you or hello, and how are you doing? How's the family? I get to know my clients. I want to know my clients. I want to know their family. I want to know their everything, because doing that is what builds your business. And I will tell you, just from snagging deals from different lenders all the time, because some realtors, and you may be listening to this, just go, oh, they're already pre-approved through Georgia Bank or whoever it is, and assume that that's okay. Do you understand that once you get a contract, it's real? It's real. It's go time. This is it. They're buying the biggest purchase of their life. If that loan officer is not there to talk them off the ledge, to give them insights, to give them information, to educate them, what do you think is going to happen? If that experience just turns a little bit bad, you know what's going to happen? They're going to be frustrated. They're going to tell people. They're not going to work with you. They might have to, but they're not going to want to work with you. Those are people. These people are so important, these clients, that you're leaving referrals on the table. Okay. When I went into this business 6 years ago, I said, I'm going to do it different. I'm going to find a way to do this different than anybody else. And I will tell you, my friends out there that are loan officers, I don't see any of you doing podcasts. I don't see any of you doing really much, maybe just posting pictures or commentary online. That's why I do this. It's different. I invite people to join me in conversations about real estate, about life, about finance, about credit, about our youth trying to get through this crazy, hectic life we live in, to own the American dream and do all these things. And that's my mentality. And that should be your mentality too, because if it's not, this might not be the industry for you. I'm just going to throw it out there. Okay. Our job is to educate, motivate, and offer personalized solutions to clients and do it better than anybody else. Okay. So when I got into this industry, I didn't know where to start, but I said, I'm going to build a blueprint and I'm going to run with it. I'm going to run with it hard because I have no other choice. I quit my job of 13 years. Done. Had a mortgage, family, bills, all the things. I gave myself 6 months reserves. That's it. 6 months reserves to survive. And here we are. A lot of things have happened. My passion every single day is waking up in the morning and helping clients. I love it. I love it. I talked to a great person today. It was supposed to be a 5-minute phone call. It turned into 45 minutes. And we were just chatting about options and how I could, I think outside the box. That's my biggest thing is, how do we think outside the box? And that's what I did. And she was like, wow, I learned more in 45 minutes than I have in the last couple of years trying to figure this all out. And we had fun with it. That's the best part, is having fun doing what you're doing. And that's why I left corporate America. That's why I went on my own. I have my own mortgage company so I could help people the way I want to help them and make it better and do it better than anybody else out there. And I'm sure there's great people out there. Don't get me wrong. But, a lot of people have been doing this for a long time. And I always say, if you're not changing with the change, then you're going to be left behind in the dust. So something to take a look at. So segment 3 is talking about creative financing. So let's peel back a little bit more. We're talking about leaving money on the table. This is a way to bring it back to the table. So a lot of realtors don't fully understand or even know what non-QM sector is. So non-QM stands for non-qualified mortgage. Essentially, it's everything that's outside of the Fannie Mae, Freddie Mac conventional box, okay? Where instead of tax returns, if you're self-employed, we could finance you and pre-qualify you using bank statements. If you're an investor, we could do it based off rent schedules. So how much is a property going to be able to rent for? Is your payment less than that? We could do profit and loss statements. We could do 1099 only statements. Yes, these programs take a little bit more money down, but they're great options. I haven't done a conventional loan for myself since my last house. Everything I've done is bank statement loans or 1099 loans. So those are things that you got to think of when you're talking to clients. Is if you don't understand, and that's, again, going back to my education piece, is that I try to educate every single person about all these options, because the majority, and I'm going to go on a limb here, if I were to be in a room with 10 realtors right now, I guarantee you 3 of them would probably know about the non-QM sector, maybe 4. Okay. So why leave money on the table? So let's talk about a few things. So bank statements, I just got a clear to close today. Liza, my amazing realtor, love her. She referred a client who owns a business. Tax returns just weren't there. Makes a ton of income on his business. Did a bank statement loan, clear to close. No questions asked. Very easy. 15% down. Rates were good. So those are all things, but that's how you got to do. Like, tax returns are typically a mess when you're dealing with self-employed people. I'm just telling you, unless they have like a bunch of employees in our corporation, they're all over the place. Okay. But a lot of times when you have a situation like that, there are banks and lenders out there that will tell the client no. Well, guess what? The client comes back to you and says, hey, it's not going to work. You don't know anything about non-QM or bank statements. Guess what? You're like, oh, wah, and that's it. But you could have closed the deal. And think about that. If you're paid, I'm rounding up for math purposes, but let's just say, we'll round down. Let's just say you get paid 2% on each deal. You close a $500,000 deal, or if you don't close a $500,000 deal because your lender or your mortgage broker said, we can't do it, you just threw away $10,000. So it's like taking $10,000 and just saying, see ya. Those are things you got to know. You got to understand that. And I don't know what it is, but I don't know why I just can't understand some realtors out there and the way that they do things. It's just beyond me. I'm always trying to learn. I'm always trying to connect with new realtors. A lot of people tell me to kick rocks, and that's fine. Work with your guy that's been doing this for 30 years and think about all the deals that you didn't close or maybe didn't close and start thinking about how much money left on the table. So DSCR loans for investors, this is a big one. So a lot of investors I talk to, they want to buy properties, not have it tied to their personal credit. We close these in LLCs. We could close them with the EIN for your tax ID. And it's asset protection. I talk about it all the time. If you have a lot of assets, you don't want them mixed and matched with rental properties, that's for sure. And we could finance, you could have 1 million properties. It doesn't matter. There's no limit. But Fannie and Freddie on a conventional loan, you could only have up to 10 financed properties. But I think the biggest thing is I'm pretty versed in this. I do a lot of them. So I would say probably about 50%, if not more, of my business is the non-QM sector. And I always talk about asset protection, creating LLCs, how to run an Airbnb since I have one up in Blue Ridge, Georgia. And P.S., if you ever want to go there, hit me up. We would love to have you at our cabin. We offer great friends and family discounts as well. But those are things you got to understand the commercial side of this. You got to understand the bank statement side of this. You got to understand the 1099 side of this, profit and loss, all the different things. So those are all the things you really have to really grab onto. They're out there. They want to be used. I have lots of lenders. This is all they do. They don't do the normal FHA stuff. They only do non-QM. And I just closed, like I said, one. The underwriter was fantastic. Any questions we had or clarification, we worked together. It's so easy. Honestly, it's so easy to do these loans. It's wonderful. So here's the big takeaway. When you say yes to buyers, other agents can't serve you. You win clients for life. Okay. So when you say yes to buyers, other agents can't serve, you win clients for life. Realtors who only work with lenders that live in the conventional FHA box, VA box, are leaving so much money on the table of commissions. And to be honest with you, may be doing a disservice to your clients in case they have other options they're unaware of. Okay. At Anchor Home Loans, we specialize in this space. This is my go-to. This is my favorite sector. And I'm not saying every buyer should go non-QM, but when you got a self-employed buyer, someone turned down by a bank, just don't walk away. Call me. Chances are we're going to find a path. I've always found a path. I don't think I've ever had to deny a loan or been in contract and deny a loan because of a situation ever, because we do all of our due diligence. I think we pretty much close 100% of our loans unless it's a non-warrantable condo or something that's out of control. So I wanted to share a few quick stories that really highlight this. Okay. So I had not too long ago a realtor partner whose buyer was denied by 2 different banks, because the debt to income ratio issues. But instead of walking away, we looked at alternative programs that got them in the house they loved. The realtor got a no. The mortgage person said no. I found a way to do it. Now that realtor brings me every single one of her deals, including the tough ones. And it's okay. Hey, we win, the client wins, everyone wins. Another time I worked with a local investor who wanted to buy multiple properties but couldn't qualify. All right. We used DSCR financing to close deal number 1. And within a year, he had 3 more under contract. All the same realtor. So think about that. Client finds value. Realtor's happy. I'm happy. Help the client and their family. Now that client's like, oh, okay, we could do more of these because I have the money to do it, but I don't have the income to show it on paper. It's a no-brainer. Okay. So that agent didn't just earn 1 commission. She got a repeat client worth 6 figures of commission. 6 figures. All right. One of my favorites, a family-run business owner here in Florida. The CPA wrote off so much that their income looked negative on paper. And, of course, the banks, guess what? They turned it down. Again, we used a bank statement loan, closed the deal. And today, they're still sending me referrals. And that realtor has been on every one of those deals too. That's how it works. I get questions from realtors all the time. So let's run through these quickly before we wrap it up. So question 1, how fast can you really close? Good question. So with the right buyer, and I'm not saying right buyer, but with the buyer that is motivated, right, and understands timelines, so we get the right docs. At Anchor Home Loans here, we could close under 14 days. Okay. Sometimes faster. Appraisals are super fast right now. Usually it's title and insurance that are lingering, but 14 days. And that's for all loan types, not just cash out refinances. I mean, same thing in the non-QM sector. As long as everyone moves efficiently, we could definitely do that. So really important. Actually, the lady I talked to today, I said, to make sure you don't lose the deal, we'll put a 14-day finance contingency and a 21-day close. No big deal. I'm marking it. We could do it. Question number 2, what makes Anchor Home Loans different than a big bank? So I would say this is the big one. To me, it's simple. It's communication and creativity. Okay. Banks, you got a loan officer who gets paid 9 to 5, whether they close your loan or not. They might get a small commission. They don't really have any investment in you, if you will, if that makes sense. I don't get paid anything, and I spend money until you get a key to your house. That's the path there, right? But I would think the other thing is creativity. I mean, communication. If you're not communicating, then you should just not be in this industry at all. But creativity. I like to dig deep and find a path and make sure that you're updated on that path the entire time. And there might be times that we don't talk for a week or two because everything's running smooth. I might call to just see what's up, see how you're doing. Or there might be situations where we got to dig a little bit deeper, but it's okay because we're always thinking, and I have tools and resources to get through those things. But I would say that's the biggest thing is that we don't have one option. I'll tell you that's big because every lender's different as far as rates go and all that good stuff. But the biggest thing I would say is that we're creative. I know ways to make this good, and I treat every client like I would treat myself. How do I explain non-QM to my clients without overwhelming them? That's a good question. So I would say, in my opinion, keep it simple. Tell them traditional financing isn't the only option. My lender partner has programs built for self-employed buyers and investors. I think that's an easy one-liner. Call creative financing, whatever you may, but leave the details to me. I'll explain in which way it makes sense to the client. Obviously, I know how to curtail to certain people, and so they could understand it. I always say when I'm not understanding something, maybe I'm talking in ChatGPT, I said, explain it to me like I'm 7 years old. And that's what I do, in a way where they could understand it. So market outlook. So looking ahead into the end of 2025, here's what realtors need to know. Rates are they're starting to come down, but they're eventually going to cool down. That means the buyers who stretch now will likely refinance later. Don't let them sit on the sidelines waiting for a perfect moment because they'll miss opportunities. So if you're dealing with a buyer or have a family that's been looking and looking and looking for years and years and years, I mean, if rates are deterring them, they shouldn't be buying a house. Now, rates have been sliding down, and their lowest have been since October last year. Now's a good opportunity where maybe they could buy more house, or they could buy the same amount of house at a less payment. So I would say those are important things to keep in mind, is that keep people motivated. Don't let them get lost. I can't tell you how many times I'll talk to a buyer and I'm always in front of them between my CRM, me calling them, talking, texting, whatever. And I'm like, what happened to John, the realtor? We couldn't get a hold of him and he just wasn't really, so we found somebody else. Big thing, just saying, it happens. I had somebody leave me once because I was on vacation and they went with someone else. It was actually my first closing with Anchor Home Loans. And she said, I'm sorry, and came back. And not only did we crush the deal, we got it clear to close in 5 days. Better term, better rates. So I do my best, but sometimes you do need to step back a little bit. But I have people in place now, so when I'm not here, we could help them. But I think the biggest thing is creative financing is only growing. It's going to grow bigger. The banks are tightening their credit standards. They want the perfect box, and the rates aren't even that good, and it takes forever. So I don't know why people use them. To me, it's kind of stupid, but whatever. But the biggest thing is you got to lean on your lender. You got to lean on the partnerships. And the ones that are going to stand out are the ones that are always going to be successful. I'll tell you this. It's been, for some people, there's a lot of people out there that aren't in this industry anymore. They just couldn't figure it out. They couldn't move. They couldn't think outside the box, beyond the blueprint, right? I'm always innovating. And that's why I am actually increasing year over year. I think my first 100 client month was 2021 or 2020. And each year I've done more and more and more. My goal this year is 150, and we're on track. So, and that's just me, one person. So you got somebody who's motivated. I'll tell you that. I'm always motivated to help people. It's my passion. So here are 3 quick nuggets. Ask yourself, is my lender helping me win more offers? If not, you're competing blindfolded. Is my lender helping me close faster? If not, you're losing deals that you should be winning. Is my lender helping me generate more leads and save dead deals? If not, you're leaving money on the table. So quick actions you could take. Ask your lender for pre-underwritten approvals on serious buyers. Eliminate all the waste and BS that might come up. Promote your fast closability in every offer you write. Add a QR code, a co-branded pre-approval link to your next open house flyer. Don't write off self-employed or investor clients. Honestly, they are the best clients. They have a lot of money, great credit, very easy to do. And don't leave stuff on the table. So here's the truth. Realtors who leverage their lender the right way win more deals. It's proven. I can prove it. They close faster. They build more repeat clients because a lot of people, they close, they're done, whatever. That's not how you work. You always get in front of them. You always ask for referrals. At Anchor Home Loans, this is what we do for our partners every single day. We're not just a mortgage company. We're an anchor in your business. Anchor in your business. So if you don't have a lender who's giving you these advantages right now, let's connect. My info is out there everywhere. You can reach me at anchorhl.com, my website, matt@anchorhl.com for email. Shoot me a text, a DM, whatever you want. You can reach me in 25 different ways. But I'll show you what it's like to grow with a lender partner who actually helps you grow and cares. So thanks for tuning in. I know it's a long one, a lot to get off. I do want to take a moment of silence for, the tragedy that happened yesterday. Everybody we got to stick together. We have to unite as one. We really have to unite. There's a lot of good and there's a lot of evil, but the good needs to supersede the evil. So whatever I can do to help you grow your business and help you succeed, I want to be that person to help you do that. So make sure you're subscribing, and there's going to be more real talk. So I'll give you real strategies and I'll help you win in real estate. And I hope you guys enjoyed this message. Talk soon.